Good afternoon, everyone. It is Evan from the Trade Risk on Sunday, May 17th, and I'm here with a market recap video instead of the usual article format weekend blog post. I feel like I can get a little more comprehensive in the video format, go through some more names, give a better snapshot of the current state of the market in the video format. But with that said, there's a lot to go through, so let's jump in. I'm going to try and move as quick as I can to not make this a very long video. So the big news this week is we had a new all-time closing high in the SPY, in the S&P 500. This is the range that we have been in for all of this year, essentially. We have been halted at this 212 level on the upside. We broke it today, on Friday, and while the close was not incredibly strong and decisive, it is still nonetheless a higher close than we have had before. So for me, that's constructive. Looking at this weekly chart, take a look at just the past 3 weeks and look at the tails on these candles. Look at the volatility in this range where we are routinely probing all the way down to this 208, moving up, moving back down, moving up. So it's been a pretty whipsaw. April seem that way. May, we're starting to get some more resolve, and right now things are shaping up. They are looking good. For the SPY particularly, the small caps are still lagging a bit here on a relative basis. You can see that we are trying to get back above this 123.50 area, which acted as support a few times in the month of April. It was resistance here in March, so it is a significant level, and the bulls will need to try and get this close back above here to move back into ultimately the previous highs at 126. The Qs had a pretty nice close as well for the week. If you take a look at the weekly bar here, you can see we are now back above 109, closed above it. Similar context here as the SPY. If you take a look at the last 3 weeks, these candles, the long tails on the bottom end there, you can see the volatility of as of recently, and hopefully now finally we are getting some perhaps steady resolve uptrend action to follow here. So the Qs in pretty good shape, not quite at these recent highs. The Russell, sort of lagging the 3, and the SPY starting to look real good. So let's look at some of the internals here that I like to look at, and that's namely the cumulative advanced decline line, and then the McClellan oscillator here. We'll start with McClellan, this bottom pane here, and you can see we punched back above the 0 line, which is traditionally seen as a bullish indicator. You basically want to see the McClellan hang out above 0 for that positive money flow in action support breadth of stocks, and we got that. So you want to see this hold above 0, you want to see it base above 0, and continue to look constructive above the 0 line here, because it has been hanging out below it for the past several weeks. So that is constructive. Now if we look at the cumulative advanced decline line, we are not quite, so you notice we closed at all-time highs on Friday, and we are not quite at all-time highs here in the AD cumulative line. So there is some slight negative divergence here. I wouldn't, again, I don't think it's anything tremendous. It can sort of repair itself. It can work itself out. It's marginal at this time, but it's just something to be aware of. You want to see the support of of sectors of stocks kind of catch up here and validate and support the breakout that you see in the indices. So it is minor at this time, but it's just something to keep an eye on. So again, take it for what you will as now, but just keep an eye on that going forward. Now, looking at some of the sectors here, you can see while we are breaking out in the SPY, you can see that we are coming up to the top of some recent ranges here on a sector basis. So especially, looking at this XLY, the discretionary sector, you can see 76.80. That's a level to go through. So these are sort of indications where you could start to look for names in these individual sectors, as they break out. So 76.80, if we can get above there, you perhaps see some momentum, some rotation, however you want to look at it. You could see some of these names in this group start to move. Same thing with the healthcare sector, XLV, coming back to the top end of this range here, a little bit wider, but 74.60, get above that. That could mean a more sustainable leg higher for names in this sector. And a handful of others. The XLP, the staples, you can see we're challenging now back to a level that has been tested since December of 2014. So, you know, almost 6 months now, we have gone basically sideways in this XLP. So look for that to potentially break out over the next coming weeks. The industrials as well, coming back into this 57.50 level, top end of some larger consolidation. So for a sustained move, when you start to think about what this could mean for the SPY, this breakout that we saw, new all-time closing high, you want to see those sectors start to break out. You want to see participation amongst a broad base of the market. So with that said, let's jump into some other names, some other sectors, some other markets. TLT, we did get that bounce. We identified this in our video earlier this week, 118 to 119. This little mattress of support, it acted as support back here at the end of 2014. We came slamming down, virtually oversold on all signals into this level, and that does make typically a nice reactive bounce play. Now, not my style, but it's certainly one of the higher probability trades in my opinion. So we did see that snapback move, especially on Friday, closing up 2% on the day, which was quite impressive. But the downtrend is still very clearly intact here on the daily time frame over the past several weeks. So the bulls certainly have more work to do, but for now, it does look like we've put in a short-term, at least, bottom right around 118. Let's see if they can continue. Let's see if they can support this market going forward. USO closed basically flat on the day after Friday's session. We were probing lower back down to this $20 level, but you can see with this nice solid green candle on Friday's session, we did manage to rally back up to the closing price of Thursday. So keep an eye on this one. It is consolidating. It's had a nice move from these lows here in mid-March. We'll have to see if it can stabilize here above $20. I think that would be very healthy. Moving averages are catching up, so I think a high-level base here to work itself out and to digest some of these recent moves would be constructive in USO, so keep that one on watch going forward. Now, natural gas has continued to move. Take a look at a weekly chart now. You can see 3 very convincing candles here in a row now, ever since this potent one back to kick off the month of May. And we are basically back at $15 resistance level. This is a pretty big level for it. Back to a daily chart, you can see this is where we've based out. We've failed basically all of 2015. So we had a brief moment above it right here for 3 days. But, basically $15 is a big level for this market right now. So natural gas, I think that will be very key in the next week or two to see how it responds to the $15 level. Moving into some of the metals, gold, it's got a little bit of luster return to it recently. It's got some momentum behind it. Most of this fueled by the dollar US dollar that's been falling. Same can be said for oil, natural gas, and all of these commodities. So gold looks pretty constructive. It's got some at least momentum on it in the near term. Silver's the same deal. This one looks a little better here. Take a look at a weekly chart. Now you can start to see a more convincing, healthier looking bottom base being put in here, and above $17 is a level that you want to see silver get back above and sustain, especially for the longer term holders in silver, or just looking for the longer term trends. This is going to be a big level to break above to sort of solidify an intermediate term bottom in silver. So I think that one is a good one to have on watch. Now let's jump into some individual names here. Apple, we'll start there. Zoom out a bit here. This one has been, still just moving sideways. Very healthy in my opinion still. It's just been going between base call at 124, 130 on the upside. Still waiting for something to change here. I don't think I've seen a very clear reason to get involved. This bar here on Thursday was, obviously a very convincing, nice bullish bar there to break above some of the fast-moving averages and clear some of the recent supply in here, but I think it needs a little more advancing, certainly above 130, I think would get a more convincing close there. And if you look on a weekly chart, you can see how it's struggled here for, most of this year, really, dating back to February. So this is one that is starting to get interesting for me, but I haven't traded Apple in quite some time. Maybe that'll change soon. Netflix is a monster. It's just continuing to power higher. Had a real nice gap up on Friday, up 4.5%, above $600 now, and it's certainly just a chase effect that is on. I don't know what the short float is in Netflix anymore, but perhaps there's a lot of people under pressure to cover those up, if there are still any. I'm not even sure, but looking at a weekly chart here, you can see it's just continuing to hold support, break resistance, and trend higher very aggressively. So this one, congratulations to anybody that has been involved in this, that is involved in this. This has been a hell of a move over, certainly over this year. Basically, when we came in right around 340, I mean, it's almost been a double just on this year alone, which is just very, very impressive for a name of this size. So Netflix continues to look well. Amazon hanging out still. Had this nice gap up that it's still holding from earnings. It tested down here right around this 415 level. It held. So I mean, as long as that holds, I think you want to be optimistic. You want to be looking for these long setups in Amazon while you do have this pent-up open gap. So I think it needs a little more time here. Still needs a little more convincing, sideways action. Above 433, I think you get a little bit of a trigger trade there to get on some momentum. Resume of this uptrend. But for now, I think Amazon needs just a little bit more time. So let's give it that. Facebook. Look at this nice bar that I put in, real impressive bar on Thursday, up, I don't know, about 3.5%, I believe, on that day. Let's look at a weekly chart. You can see it's trying to put in at least a short-term bottom here. It still has to get back above this $81 in my book to start to get a little more interesting on the long side. It's just in a longer-term holding pattern right now. Weekly chart, I mean, it's tough to be too bearish right here looking at this formation. So I mean, it just sort of needs time. It's still digesting. It's still doing its thing. But I'd imagine that sooner or later it will start to make a more decisive move. It's just moving essentially sideways, which is fine. And I just think it's a time to not overtrade it, not overthink it, and start to look elsewhere until it's ready to set back up again. Twitter has continued to struggle ever since this earnings. Horrible close on Friday, given the fact that it was trying to get going midday, but it closed just pretty horribly. Looking at a weekly chart, you can see, we are at this $36 level of support where you'd, figure that buyers would kind of want to step in again. We'll see. It still needs more time. Moving average is still racing lower to catch up with price. So let's see if next week gives us any more clues to the next directional move in Twitter. Tesla has been moving real nice ever since clearing this 220. This one's kind of, running away right now above all the fast moving averages. A little bit of a chase here in Tesla. It looks great. I haven't seen a very clean, actionable setup for my type of style, so I'm going to just wait this out until I get something that I like to see. But for now, it looks great, and I'm just hoping to get some more consolidation on that to jump on board that train. Alibaba, this one looks good. The candles recently have slowed down just a little bit. It still looks sort of ominous here, like it's not powering higher after this earnings report. It did leave this nice open gap here, which it's held and defended nicely, but it's certainly not rip-roaring to the upside. If you look at a weekly chart, this is a nice little engulfing bar here, last week's candle, and then this week, tough to be, tough to not like that, is closing up near the highs. So this one's an interesting one. I am watching it pretty close. Perhaps a move above today's highs. Just get back above perhaps $90, $89.50. A little more convincing I need in Alibaba. I think that one could be an interesting one to get long. GoPro, similar story here. Taking a look at the weekly chart, I mean, it is just sort of levitating higher here, but look at this. Look at these last two candles here on the weekly time frame, both holding above this $46 level, both closing essentially flat on the week. So GoPro getting pretty tight right around this $50 level. Let's see if it wants to make a more definitive move, similar to Alibaba, on the next kind of directional, either continuation of the uptrend, or if it's going to snap this, this rising little trend line here and start to retest or head lower. GoPro, we'll need to see how it acts coming up in the next week or so. Now let's look at some setups I have for the week. I really like this one, BLOX. We've talked about this one in the recent past. Based out nicely between $23 and $25. It's up near the top end of the range, but it gets better because if you take a look at a daily chart, zoom out here, you can see this nice open gap here that it's basically right on the fringes of moving up into. So a real wide open gap all the way up to $32 in BLOX. Let's see if it can get a close above $25, start to move into that gap, and it can move pretty quick because there isn't a lot of previous supply to contend with in there. So I really like the potential in this trade. I'm watching it, especially on a weekly time frame here. You can see, I mean, it's come a long way, all the way from $12, but it's putting in a very nice, healthy, sideways base right at a level of interest. I think it could. I think that one could move pretty nicely if we do get that. So have that one on watch. eBay is another one, mostly on a weekly time frame chart. This one's very choppy. It's back and forth, 2 steps forward, 2 steps back on eBay. So I think you need to have a little bit longer of a time frame because it doesn't seem, at least it hasn't been able to demonstrate recently that it can sustain a very clean uptrend on a daily time frame without kind of whipping around back and forth. So I think you need to close above $60, be a new all-time high in eBay. Look for that essentially, but it is trying to stay constructive up here, but it is just very choppy as of recently. So Friday's candle, obviously not a very good momentum breakout candle by any means, so it definitely needs a little more time, but let's see if it can get back above that $60 level, give us some setups here in the near future. CRR, this one's staying real tight up against 44.60. Let's take a look at this. Let's go to a weekly time frame here. You can see it had an explosive move to kick off the month of May, and it's hanging up here right around this 44.60 level. You can see it's been beaten up for basically most of 2014 as oil was getting crushed. This one was crushed all the way down from $150 is where it was last July. So this one is this one's interesting now. Back to a daily time frame, you can see just staying really high and tight. So 44.60 or so, I think that'd be a trigger level I'd be watching for the upside. Next is SWKS. This one seems to be on a lot of radars here. Needs to basically get back above the very clean $100 level. Not the most impressive session on Friday, but it's still hanging pretty orderly up here. It's had a hell of a run, so keep this one on watch above $100. And then finally, GPC. This one, not the cleanest one that I have, but it's had a little bit of a move off the lows, kind of broke this descending trend line here that was in place all of this year, and let's see if it can make a move above this little cluster of resistance here right around $95, $94.50. That one could get going in the next couple of weeks. So if that is all I have, I hope you enjoyed the video, and I hope this helped. As always, if you like the videos, please do subscribe to the channel, and as always, thanks for watching, and I will catch you next time.